Alright guys, welcome back to another video. In this video, we're going to be talking about gold and silver's next move after this historic one-day decline, right? So we can see in this chart here, silver is down a staggering 36.5% in one day. This is from the peak of the day until the low of the day, right? If we take it from all-time highs, I think it's down around 40%, right? Yeah, you can see 38% here. So what's the next move for gold and silver, right? Because obviously these are very highly traded names right now, and also they have been very volatile, right? And not to pat myself on the back too much, but I did call this in the last video, right? We can take a watch of the video and what I said, right? And I posted this on the 30th of January, somewhere around here, right? You can see this white circle here. That's when I posted the video. But I've been short silver since somewhere here, I think. But I've been short silver since around the 110 level, right? So obviously I didn't like sell the right at the peak and then capture all of the decline, right? And the reason I sold at the 110 level was because I saw this thing right here, right? So my fundamental thesis was that it had become more of a speculative asset that all the fundamentals justify, right? Especially when you see all these parabolic run-ups. I'm not saying you should get ahead of this like parabolic run-offs, but this was like the second or third time that it had like a 10% decline within the span of one day, and I just felt there was a lot of volatility, right? So I'll talk about that more in the video. This is at 2x speed. So trillions of dollars vanished from metals and equities within the last hour. And when you see moves like this for gold and silver, you know you're at least like close to the top, or if not, you're at the top, right? So I'm hesitant to say whether it's a local top or a long-term top, right? That part I do not know, right? But I know that we are roughly at one of the peaks, right? So maybe it's another 20 to 30% correction before we go on another 500, 200, 300% rally, right? Who knows, right? I'm not going to try to say that I have insight to that, but the insight that I do have is that gold and silver are actually looking very weak if you look at the price action this past week, right? Silver has not only gone down 10% plus in like one day, not once but twice already, right? So just in the span of 1 week, right, silver has already done that twice, right? So the volatility is quite insane. So if you're trading all these metals, do manage your risk accordingly, right? Don't think that it's a large market cap, it won't move a lot, right? But you can see clearly the trading frenzy has taken over these assets. So it's not all based on fundamentals, right? Don't read an article saying, oh, the solar panels are going to take up all the silver demand, that's why silver is going up, right? You can see clearly the solar panels are. So clearly the solar panels are not taking up all the demand, right? Apparently solar panel demand is down 40% just from one day ago, right? So obviously I'm being sarcastic here because there is a lot of people and theories that will say, oh, it's taking up all the demand, buy silver, it's going to go to 500, right? So you can see if you listen to their advice one day ago and you bought silver, you'll be down staggering 40%, right? And this is very historic stuff, right? So in the next part of this video, we're going to be talking about what's the next thing that is going to happen for silver, right? And I thought it would be quite fun if I took the picture and asked AI, right? Because I'm not a technical analysis chart master, right? But I think AI will be, right? So I asked these chatbots what are the technical analysis on it, right? And I only did silver, right? But I'm sure you can do the same thing as gold, but I'm only trading silver, right? So this is a prompt I use. Do technical analysis on this picture and help me and identify what's the next likely move. Give me support and resistance levels and make sure your date and time is current, right? So as of 1st of February, this picture captures violent technical reversals in silver's market. This is flash cash of 30th of January and fundamental reset in the technical landscape, right? So obviously when you see a 30 or 40% decline, yeah, the fundamentals have definitely reset as well, right? Because a lot of the leverage will be taken out of the system and people who were over levered are already liquidated by now, right? You can see this wick here. This was actually a 10% move within a 1 hour, and then it bounced back, right? And you can see prices have some form of stabilization. So technical chart based on the provided image, and this is the provided image, right? I'm not sure whether you can see quite clear, but it's a daily picture, and then I give it everything, right? The RSI, the time, the price levels, and these are some of my technical levels, right? The pattern, the shooting star, the first image shows a shooting star candlestick at a record high of 120. This is indicated while buyers push hard to try to bring the prices to a new all-time high. Seller took control by the end of the session, trapping a lot of late session retail buyers, right? And pattern 2, the bearish Moru's Bozu, the crash, the final image. Silver 2 shows a picture of the aftermath, a massive bearish candle, right? That erased months of gain in a single day, plummeting from 110 to 120 to 85, right? And this was the low was like 74 or something like that, right? So fundamental catalyst, this 30% drop was triggered by the nomination of Kevin Walsh as Fed chair, seen as hawkish for the USD, right? And a sudden 36% hike in margins for the CME futures, right? Actually, the reason that I was short here also was partially based on the CME futures tightening, right? I think they tightened the margin requirements from 9 to 11 or 12%, somewhere here. But I didn't realize like, oh, the market didn't react at all, right? And actually at this point I was thinking, okay, maybe I'm wrong, right? So now we established the critical support and resistance levels with the market currently closed on Sunday except for special sessions, right? This is the current technical levels, right? Major resistance will be the all-time high. This will be, if we break the all-time high, I think most likely we are going to see a new highs, right? But you can see, you can always see something like this, right? Where you break the all-time high by a bit. And this is something that one of the YouTubers that I like to watch called Ivan on Tech, he always talks about it, right? When you see the fake all-time highs, right, you really have to be careful, right? Because these are actually institutions printing these candles in order to trap some traders or retail buyers that come in, or even other institutions, right? Because every time something breaks a new all-time high, people are going to say, oh, it's going into price discovery, you should get in now. And most of the time it is correct, right? Because they will break something like this and then they'll just gap up to like a new higher level, right? But you can see it's also done by institutions to trap people, and in this case it's a very, very big trap, right? And then the psychological barrier is 100 now. This is the next resistance. Tactical resistance is 91, which is a bit up from here. And the immediate support is 78 to 83. And the immediate support is 78 to 83. This is a Friday lows, right? And a major trend support is at 70. So I think the technical analysis, I do agree with it. My trade that I put on, although I didn't look at the technicals because honestly on Friday I was a bit too tired. I was putting on this trade at 2 a.m. right? Which I could argue I probably shouldn't have put on this trade in the first place, right? Because the trade is right now about break even, but I did have to weather like a 7-8% drawdown and then it bounced back before it went to break even, right? Because I think I opened the trade on SLV around 77. So in the after hour markets is around 77 now also, right? But honestly, I might be just having hindsight bias right now that I look at it, because I did use a technical support level. It's just that the technical support level wasn't the ultimate low. And then I did add some at the 70 level as well, right? So I don't think it's as horrible as I think it is. And next, Gemini is going to tell us about the next likely move, right? Because the CME margin hikes are effective tomorrow, the market is facing a liquidity squeeze, right? And then the next thing they say is a dead cat bounce scenario, right? These are all the scenarios that Gemini is giving us in order for us to try to make our decisions, right? So a brief rally toward the 95 to 100 zone is likely as short sellers take profit. However, institutional money will sell into this strength, right? And the secondary flush scenario, silver fails to hold 80 on Sunday evening, which we will have to see, right? It's opening quite soon. Will likely teleport to 70, right? Teleport straight away and to support levels within hours as the new margin requirements force remaining over leveraged traders to exit, right? Consolidation, the most healthy move would be to trade between 80 and 95 to digest the volatility and reset the RSI, right? So what do I think of Gemini's analysis? Honestly speaking, I have around the same analysis as Gemini, right? But my scenario that I'm leaning towards is this dead cat bounce scenario, right? Which is why I'm actually long, right? And honestly, I do think it wasn't the best trade because of the sizing I used, right? I think I should have used a smaller sizing, maybe 50% of the position I use, so I can handle this volatility better, right? Even though I haven't been whipsawed out of the trade, probably shouldn't have taken that big of a drawdown. Regarding the analysis, I do agree with most things that Gemini say. I'm not sure whether Gemini is like having the same thoughts as me because I'm showing it the charts and then I'm talking to it, or is it actually like these are the support levels and I have gotten it right? I would like to lean towards the second scenario, which is like these are the scenarios, but you can see it's not helpful when they say like, oh, SK Hynix, blah blah blah, because I was asking you about SK Hynix before this, right? So next we move on to Grok and what Grok thinks, right? You can pause the video. I'm not going to read through one by one, right? But basically it's going to tell you the backstory of what happened and everything, which we already went through with Gemini. All these takes are quite similar, right, when it comes to these chatbots. We look at the likely next move, right? The parabolic rally appears exhausted, while overbought RSI and reversal candle suggested high probability of continued pullback or consolidation to digest the gains. This could manifest as a healthy correction within a broader bull market driven by industrial demand, geopolitical tensions, and investment inflows. However, sentiment is mixed. Some analysts see this as a pause before resuming upward to new all-time highs, while others say that, oh, it's going to go back to zero or something like that, right? Which they are saying it like deeper downside if key supports break, right? So the bullish case is that if we stabilize above the 78.5, the pullback could be short-lived, setting up a surge between 113 to 128 by mid-February, or even 185 by late February, right? So grok is really, really bullish, right? Potentially extending to 200 plus in May by a final blow-off top phase. Community ideas of TradingView highlight constructive consolidation with buyers in control above the Fibonacci extension. So you can see all the technical levels that we spoke of, right? This is actually a technical level as well. This is another technical level. So I think these bots have got it quite right. And the crowd or most people are also thinking the same thing, right? Because we can see a lot of reactions from here, right? And a pro tip that I would use, right? I always fall into this trap as well, right? Support and resistance are always a range, right? You can see that I use one alert here, but actually I should be using two alerts, right? Because this should be like a range, right? Not a single number, right? You can see here is also support. You can see that it bounced off here, where it went from 91 to 93 before failing to hold the support and breaking down again, right? So it's always a range, right? Not a single number. So the bearish case, momentum indicators point further to the downside, potentially testing lower retracements amid profit taking and overextension. A break below 78 could signal a multi-year top with risk of crashing back to 50 or lower as 2026 as per some forecasts, right? This aligns with the nasty candlestick reversals seen in weekly charts, right? Overall, the technical summary is neutral, with oscillators and moving averages balanced by but leaning toward caution, right? Expect volatility as silver has shown 30% monthly swings, right? End of the quarter suggests 86.24 with longer term upside to 94.88 in 12 months, right? So this part I don't really think is correct, because you can see that silver is moving 30% in one day, right? So I think the prediction in 12 months is going to be very, very hard for even the chatbot super intelligence to do, right? Based on the chart structure, the Fibonacci retracements are here. 100 is resistance 1, resistance 2 is the all-time high, resistance 3 is new highs, support 1 is here, support 2 is here, and support 3 is here. So I would say if we break below 70, I think my long thesis is quite invalidated, right? That's not the dead cat bounce anymore, right? But I think that would have to be a daily close below 70 for me to be convinced, right? And the last one is ChatGPT, right? So we take a look at the big picture, everything. Still uptrend on the bigger time frames. Short term is now on a downtrend. Corrective phase right now inside a broader bull trend, right? So take a look at all this candle structure, everything. I'm not going to read through one by one once again. Momentum dropped sharply, right? So RSI, this is quite important, right? It went from extremely overbought, right? Let's put this on the daily. Extremely overbought or overbought, right? To straight away neutral or midway RSI, right? So I think the RSI has been reset at this point in time. So these are the resistance level. So you can see with all the chatbots, I think the support and resistance are quite similar. They are all roughly within the same range. So I think their technical analysis skills are quite good, because if all of them agree on something, I think most traders will also agree, right? And then imagine traders that use the chatbot as information, they can also agree on this, right? So we are not using the chatbot to decide what to do, right? Because obviously the chatbots give you every scenario, right? So you have to decide what's the most likely scenario in your opinion, right? So this is when the trader has to step in and think, okay, in my experience, what has happened? Okay, what's likely to happen? What levels break and I'm invalidated, right? Because they'll give you every level up to the point when it's like 0 or something, whatever it is, right? So out of the comparison of the three, which do I think is the best, right? I think Gemini had the best analysis for technicals, right? And then actually Grok had the best fundamental analysis, right? So this is something I do agree with Grok, right? Because I think we are in a correction before a broader bull market driven by industrial demand, right? So that's my thoughts for now, right? But the way I place the trades is not based on this thought, right? Because you can think that and then you can place the trade right here. Now you're down 40%, right? That's just not the way to place a trade, right? So the reason I placed the trade on Friday is also, first of all, I caught this short, right? And then I thought this downside move was a bit overdone, right? Which some might say if I took a bit of patience, you know, waited another few hours, I would be down another 14-15%, right? But when something is down like 25% on the day already, I'm not really looking to get all that much greedier, right? Because you can see it can bounce off the low, 10% off the lows just in like span of an hour or something like that, right? And then you'll be kicking yourself, oh, why didn't I take profits? Now you're like stuck in the trade and your mental shift is not correct, right? Because you'll be thinking, oh, okay, it'll go down to the lows again and then I can close out right at the lows, right? Which is not the good mentality for a trader, right? So when it comes to my long thesis, I do believe that we are going to see a dead cat bounce. Either way, right? It's a win-win in my opinion, right? Because if we see a dead cat bounce, I'll have chance to like let's say exit at 91 or 100, right? So for now, this is currently my plan, right? For my long position, if it bounces to let's say 100 or something, I think I will be closing it out, right? Just to capture the gains and then reassess the charts, right? But for my fundamental thesis, I do think that all these industrial metals are in a cyclical bull market, right? Because if we take a look at the time of the run up, actually it hasn't been a lot of time, right? Especially from the parabolic rise, right? So some people might be wondering why I'm talking about timing when it comes to commodities, right? And timing in commodities is one of the most important things, right? Because you can see even though they have a parabolic rise like 175 days, silver is up 228%, there is no excess supply, right? This is happening because there's a supply and demand imbalance, right? The huge price movements, and there is no way to get extra supply on the market because the people who dig for all the silver and dig for all the gold, they need time to add capacity on, right? It takes more than like years and years to add some capacity to the market. Obviously, if the silver or gold price goes up 10x, there will be capacity added, right? But the question is, how long does the capacity take to come online, right? So you can say that right now the price rise is incredibly crazy or whatever, but it can go up another 500% if there's not enough supply and there's a lot of demand, right? But eventually it will come back down to the cost of the thing to produce, right? Because let's say the cost to produce ounce of silver is only at let's say $50. So currently everything above $50 is profit for the people who are mining silver, right? And the more profit there is, like Jeff Bezos at Amazon said, right, your margin is my opportunity, right? So if the miners have huge margins, 70-80% margin, you might even see all these tech companies that are extremely cash rich are going and digging for new silver deposits and stuff like that, right? Because the tech at that time might allow for digging of it, right? Let's say you have some new technology, but you can only dig silver at, let's say, $75. Now that silver is above $75, right? Suddenly your projects become viable, right? So I hope that explanation is useful as to why I'm talking about silver and also timing in the market, right? So this is April till yesterday, right? Obviously, if we take the full cycle from the 2020 lows, right, then it's a lot of time, right? It's like 800% and it's 2,000 days, right? That's why people that are getting in here and then saying that, oh, we're still early, you're up something which has been a 5 or 6 year bull market. 2,000 plus days that it has been running and it's up 800%, right? You're not early, right? You're definitely late, right? If you were buying silver at 120. So that's why at that point I wasn't looking to jump into a long or something like that, right? But when something corrects so much in a day, we can expect a dead cat bounce. So in my opinion, we are later cycle in gold and silver, right? But that does not mean there's no opportunities, right? In my next video, I'll probably talk about some copper plays and stuff like that. But for now, we are sticking to gold and silver, right? Because these next few days are quite important because I am first of all trading the dead cat bounce, which I'm not sure whether it's a wise idea now that I think about it, because like what if it opens down another 30%, right? And if that's the case, we just have to live and we learn, right? I'll give up all the profits that I made the other day, right? But I think like 30% days back to back, I think that's quite unlikely, right? So what's my conclusion? My conclusion is that I think we're going to see a dead cat bounce, maybe something like this, right? Something like this. And even though I think we're going to see new all-time highs for silver and things like that, according to my fundamental analysis, maybe I'll leave like a small position, but I won't carry the full position in this size, right? So yeah, that's about all I wanted to share today. If you did enjoy the video, do help me smash up the like button, hit subscribe, and also hit the bell button. With that being said, have a fantastic day ahead and peace out.